And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Hello, party people. Welcome to the Coach's Playbook. It's the 1st of February. The groundhog's coming out tomorrow. But in the meantime, Mick, how much winter do we have left?
I don't see an end in sight.
There we go. Perfect. I'm joined by Mick, Dan, and Hogue. Today, we're going to talk through how we choose our own levels. And due to some Zoom difficulties on my part, I'm just getting my chart set up here. So what I was thinking as an example today, we can go through something like the ES here and kind of talk about what you're looking at as far as setting levels each day. But first, Hogue, if you want to start talking, I'm moving to my daily charts right now because computers are slow and that's the way of the world now.
Sure.
Keyword daily in the charts.
Daily, yes.
Daily.
Yes.
For levels daily.
Finding levels is much of an art as it is a science. The weekly kickoff levels that we put out on Sundays are areas that take a lot of time, a lot of research to really come to. I hope that you find them useful in your own trading. I know that those are levels of importance that I kind of formulate. It's kind of proprietary how I do it. But those are levels that I kind of look for the introduction or the forcing of the introduction of longer, stronger traders in the marketplace. They're there every day. Just maybe not as active on days when they're really forced to adjust inventories in bigger ways. Those are the levels that I look for the weekly kickoff levels. But
well, great. Well, why don't I share my screen here? And I have a pretty uncluttered chart. Just maybe sure I'm not going to my private email box. Lord knows what we'd find there. Okay, so here we go. Right here, we have a daily chart of the E-mini S&P futures, right? So I can zoom in a little bit here. All I have up here right now are the 50 and 200-day moving average, and then the 14-period ATR at the bottom. I've been messing around with that a little bit for stops. So when you get to this point, I'll let Hogue first and Dan or Mick can join in. This is going back pretty far. Right now, I have this going back to July of 2019. You see, if they can see my cursor, Dan, we got the COVID dump right here. We have this crazy upward trend we've been on. Look how the first thing when I look at this is look at how long this 50-day moving average has been above the 200-day moving average, or look at how long just in general the opens and closes have been out ahead of that 50 moving average. But as we look right here for the first time since really the recovery right there, we see we've broken through and are kind of hanging around that 200-period moving average. So at this point, Hogue, where do you kind of zoom in on when you're looking at your levels?
Well, one of the things that, of course, all traders are looking for, and I know Mick is real big on this, is looking at previous swing highs and lows. That we've been through some of our more recent swing lows, and we've kind of fallen into balance there. So when we fall into balance, even on the daily time frame, the extremes of those balance become important levels. Yesterday, due to information we saw on Friday, we saw a pretty decent opportunity or pretty decent chance of us to break out one of those levels. The highs of last week were, again, balance. When we see the market in balance, we try and fade the extremes of that balance until proven wrong. Well, yesterday that was proven wrong. We broke out of that and we had an opportunity away from the previous balance. So we fade extremes in balance. We go with substantial breakouts away from balance. So even in just the highs from last week, doesn't hurt that 200 session moving average is right there as well. We set some extremes for that area of balance, and again, yesterday we broke out above it and we had a pretty substantial move to the upside. We're attempting to continue that move to the upside today. The market is telling us, hey, is it going to happen or isn't it? We of course don't know that, but the swing lows that we see back in like October on that weekly chart there.
I switched the weekly, right? Everyone, for the record. Yeah, I switched the weekly to show them what the action from last week and the highs from last week.
Got it. Yeah, so that that weekly chart is showing a degree of rejection below those October lows from 2021. We fell into balance in that area, and now we've broken out above that. Then again, it doesn't hurt that 200 session moving average on the daily chart lined up very nicely with the upper extreme of the balance that we established last week.
There was a lot of action around there, and as when you look at those lows last week, it looks like, looking at last week, this candle here is interesting, how that's sort of the rejection that you're talking about, where it broke out below here, but then kind of fell back into balance. And now we're this is the first day in a while, I feel like, today, where there's not a ton of movement at the moment. So Dan, what about you? What are you looking at here? And I can switch, just tell me what you want me to do with the chart. I can switch back to daily here.
Yeah, let's pull up those dailies. For me, when it comes to levels, as an active trader, looking at the higher time frame is great. It's super important. As you look here, it's all about visuals, right? What is the first thing that stands out here? Well, it looks like there's been a lot of price action as the market approaches that 4,300 level, right? Saw it back in October. We saw reaction around that back in like the middle of July. You've seen a lot of price action at that 4,300. So if you're seeing it, everyone else is seeing it. So I think number one, when you look at the high time frame, get an idea of where people are seeing things. If you see it, everyone else sees it. Therefore, it is important. There doesn't need to be justification behind it. But truthfully, for me, when it comes to levels, I take two things into account: time and volume. Time spent at a price, that's important to me, and the volume at those prices. Those are a couple important things, and that carries over from a weekly, a daily, an hourly, a 4-hour, 30-minute, however you want to look at it. When it comes to looking at levels, that's really what's important to me. But I think the most important thing, not so much, once you have the level, that's great. And I know there's services out there. I used to have a guy that, we sat down and did levels every day with.
Hefke.
Well, different guy. I did have Hefke, but I had a different guy too. Older gentleman out of Indiana. He'd been doing this since 1960. Levels, and was really an interesting guy. His name was Howard. He was one of the most intelligent people I've ever worked with, and he taught me everything I think I know about charting at this point. I've been fortunate enough to be able to sit down with him, but the biggest thing he taught me was, first off, you got to kind of create a system around why levels are important to you. And that, I think a lot of people have heard me talk about I-star levels. So there's a no star, 1-star, 2-star, and 3-star. I run 4 series. 3 stars most important. A no stars, hey, that's an interesting level. Keep an eye on it. As simple as that. But it really comes down to, you can have levels, you can have access to them, you can define them really well. They're only going to work if you know how to trade around them. And that, to me, is the most important thing, is how are you going to trade around those levels? So what I would ask the trader right now, let's use this 4,300 as our benchmark. When we look at 4,300, that's a key level. We huge support there in October. We saw support there in last week. Remember, it's only support in hindsight. As the market approaches, may not be supporting, but you got to keep those things in mind. And that's what I think is important. It's not always going to be support. They're inflection areas. How's that market going to react, and how are you going to trade as the market approaches them? That, to me, is the most important thing. So how I look at this is really understanding that price action. As that a market starts to approach, are we seeing movement and volume, using the basic principles of volume as the market approaches? If volume is continuing to come in as market is getting directional, what are we seeing? Are we seeing that market continue in that direction with volume still coming in? If that volume still coming in on that down move to 4,300, there may be a great chance to short it. Now, as you look, you can start to see, when Jack, if you look at our volume down below, as that market started to break, you started to see volume started to thin up as we started rotating to the downside. As soon as we hit these moving averages, you saw volume start to scoop back up. When that volume's coming back in, as that market's starting to stall and possibly turn directions, that's an indication that we may start to see things move into an uptick directional. Yeah. All right. So it's basic principles of volume. It's not always perfect. But those are a couple of things that I think you have to keep in mind when it comes to trading levels. Just because the market approaches, don't execute.
I switch back again to the weekly because I think that this is fun to look at the volume here. So you see like this past week, last week, where it kind of reversed there is the highest volume we've seen on a week since the beginning of the COVID bounce. So that's a strong volume week. Now, that gets exaggerated by the Fed and stuff like that. That's why I like to go to the weekly sometimes for the volume stuff. I'll go back to the days. Mick, before I get to you, I have a quick aside that needs to be said because you were talking about your guys with the levels. Is we had a bond quant levels guy where I used to work, really smart guy, and his name was Michael Jackson. And my right about the time that I started over there, I had two partners were my bosses at the time, and the one partner texted the other, and he just said, "Did you see Michael Jackson died?" And he just got a call back from like, "Oh my God, what happened?" He's like, "Wow, you're like pretty amped up about this Michael Jackson thing." He's like, "I just talked to him 15 minutes ago." And it was, of course, he thought that poor Bond Michael Jackson, but he's still around. So just aside. Mick, what about you? I'm back on the daily here.
Thanks. Yeah. I'm very excited about this conversation. I love talking levels. Looking at these charts, it's reminiscent of back in the day when I had started trading, shared an office with some guys, and we had a big 10 by 10 whiteboard in our office with the graph lines. And I used to hand chart the wheat market. I would plot all the moving averages and stuff like that. This stuff's fun. Jack, if you don't mind,
sure.
Throwing a daily up. Looks like you got the daily, actually, as a matter of fact. Yeah. So when it comes to levels, I like looking at swing highs, swing lows. I like looking at congestion areas. On a daily basis, I always like the top-down approach. You guys have heard me say that before. Being conscious of weeklies is very important. But, part of the preparation starts after the close. And I'll say, I used to take a rectangular piece of paper like this. I'd plot out the day's settlement price right in the middle, and then I would leave all the levels that are above. I'd list all the levels that are above and all the levels below. Those levels, Danny's got it right there. I almost made it look like it was a dome, the price ladder with the prices, and then I'd write down on the side what those levels were. So every day of preparation involves settlement right in the middle, previous day's high, and then previous day's low below. I want to look at the previous week's high and previous week's low. I'll also include important moving averages in there. So that's written all out. That's all written out. As far as the charts themselves go on the computer, I annotate my charts. I draw lines. I draw trend lines. I mark off swing lows, swing highs. I also draw boxes around congestion levels. If you look at right on the October line on your chart there, Jack, if you scroll up a little bit, see that congestion area where we have a lot of price bar overlap. Beginning of October, I'm just talking about.
Yeah, so I'm looking. Sorry, right over here would be
right
October
there.
range. Yeah.
So I've got a box starting there going all the way across my chart to current day's price. And what's kind of interesting there, and I'm happy we're talking about this now, is because I got a couple examples about this of these congestion areas. So you can see as we sold off in recent weeks, we ended up trading down into that congestion area, and we tested below that swing low from, it looks like the very beginning of October, end of September. We were able to bounce there. So you guys have also heard me say I don't like labeling things as support areas or resistance areas until we've actually seen them be support or resistance. Now, we recently traded below that swing low, spiked back above. Sorry, I'm losing my hair and it's falling on my face. And now that we've bounced back from that level, you know, that box of that congestion area that we've dragged across, you could say that that was support. Now it's kind of interesting. If you look at the beginning of December on your chart, you also see a little price bar overlap. I would call that a congestion area. I'd have a box. I have a box dragged all the way across, and we're kind of pushing up into that area now. So I'm very curious to see the price action at this level. Is this going to be resistance? I don't know. Maybe, maybe not. But these are all things that get my eyes focusing on certain price levels and gets my mind thinking a little bit.
No, I think that's a really good point
Mick,
there.
Oh, I was just going to say, Mick, you got a question here from Big Toasty.
Big Toasty in the
Yeah,
house.
Big Toasty in the house.
Come join us.
He's asking, Mick, do you use footprint charts or only technicals?
Can't really say I know what a footprint chart is.
Dan, are you aware what that is?
No, it's something I don't use. I know it's out there. I know a lot of people use them.
Is that like market profile at all?
No.
Let me check.
Footprint charts tell you like volume and delta per tick. It'll tell you, you know, what traded on the bid side, what traded on the offer side, and for each tick.
Is that something that you ever use, Togue, or?
It's nothing I use currently, but something I'm kind of investigating. Peter Davies Jigsaw, they have a footprint chart. Book Map, they have a footprint chart, and on TS Trader there's something similar to that called
I want to play the Jeopardy music right now.
Yeah, I know, right?
Yeah.
They're having trouble finding it here, but there is something that's similar to that on TS Trader. I don't want to waste time looking for it right here, but I'm trying to think of what they call it.
If you find it, let's come back to it.
Okay.
I don't really care too much about the volume at price per tick. You know, when I was doing market making, it was very important to see how many were trading at what price, and also see how that price was trading, whether you're getting little pecks or nibbles at the bid or the offer, small quantities, or you see someone hitting a bidder offer, you know, 100, 500, something like that. That was valuable information for me as a market maker. Trading on the higher time frame, it's not important information to me. So no, I don't really, I'm not too concerned about the price, the quantities that trade at certain prices, like this footprint stuff sounds like.
Yeah. So from here, so what I'm seeing now is I like that discussion of the congestion areas too. That worked out kind of well over here. So now we've broken out of that. And right now there's some hesitation as we're kind of testing this other congestion area here. We talked about this 4,300 number being huge. And then up here, you know, up top, 4,700, there seems to be resistance. We did break above it once. What was the all-time closing high? Was around 47.86 or thereabouts. So yeah, there's definitely a lot of things you can do here, and we haven't really cluttered it up with a bunch of indicators or anything yet. There's just moving averages and some trend lines here.
Yeah,
Dan,
I just wanted to add one thing too, you know, and I know a lot of people out there use a lot of indicators. They put a lot of stuff on their charts. When it comes to starting putting the levels and kind of creating what your own visuals and charting, it's going to really help to start to remove some of the automated stuff. You know, I know there's a ton of indicators out there. But as you start kind of making these executions and starting to build out your charts, really focus on the stuff that you've kind of developed yourself. I think you can get lost using everything else that's out there. Moving averages, I think all four of us here are on the same page. We like moving averages, maybe a few other things, but really, find those areas, find the way that you can drop your charts in a sense, and really focus on that. Kind of get rid of the noise that fills up these charts. I've seen charts within our Facebook community that I can't tell what's the market and what's their indicators. And you start reading into the comments and people are asking, what indicators do you have? And I swear it's like a Bible, the amount of indicators are in. I get so confused seeing that much stuff. And I think like that really helps you out as a trader, is clearing the air a little bit, get rid of, the noise in these things and keep yourself a little bit more.
Well, check
clean.
out. I just typed an A into the indicators. Ready for this? Look at that. That is some wild stuff there. The CM modified Hakushin Ashi trend bars, maybe they're great. Who knows? I kind of like that on this. They seem to be showing, I don't know what these are, but I guess people can make their own here too. Also, before I kind of close out this chart, the end is today. The other thing I have on here is, watch. I don't actually trade futures on this platform. I just kind of like it for doing visuals because it's simple. But, keep an eye on the different equity indices, VIX, dollar. I'm not a Bitcoin guy, but it's worth knowing where it is. Oil, gold, silver, and my good old friend, the 10-year bond. Is there anything else any of you guys watch on your watch list? You're a crop guy, Mick. So besides that,
yeah, I've been keeping an eye on the beans. They've been rallying like crazy lately. It was funny. I was talking to my father a few weeks ago, and he told me, he's like, you should keep an eye on palladium, something I never even thought about. So I have nothing to share on it other than it's just a market that I've never looked at in my whole entire life up until a couple of weeks ago.
Yeah, it's a weird one. It's a use, unlike the store of value metals. I mean, you can use gold for things. It's a great conductor, but palladium is in your catalytic converters. Yeah, that's why people are stealing your catalytic converters, is to get that sweet palladium. They're probably not delivering it for futures contracts, but who knows?
I want to mention one other thing. The best thing about marking up these levels on a chart, or like the, card Danny held up for you, you've already done the homework. So when the market trades to these prices, you can react instead of the market going to a certain place. And then you have to stop and think about what action you want to take. If you do your homework, you plan ahead, you can react, you can make smarter decisions. So it's just, I think it's a beautiful thing. A lot of people, when they start trading, start thinking about what they should be doing in the moment. And while you always have to be thinking, including in the moment, it's great to have a plan prior to new price discovery at a certain level.
Yeah, like Mike Tyson always says, everyone's got a plan until they get punched in the mouth.
Yeah. I think it was on the podcast I started. It's like the Ronnie Coleman one too. If everyone wants to be a bodybuilder, but ain't no one want to lift those heavy ass weights. That's the research version of it. So yeah, I would love to from time to time do episodes of this where we kind of go into different charts and do it. But if you want to see charts marked up every day, check out Hogue on the morning forecast on our YouTube channel at 7:45 and on the recap at 3. So Dan, was the Mike Tyson thing our inspiration for the day? And last,
I got a great one today.
I do have a shout out too.
Give a shout
out. Shout out to Kirshner Baptiste. Put up $1,600 today in the Russell. Not a lot of Russell traders on a 2-lot. So awesome. Really caught a piece of the move for the day. So hats off to him. Great job.
Great. And Dan?
I got a quote, comes from Abraham Lincoln. It makes me laugh. The problem with quotes on the internet is that it is hard to verify their authenticity, from Abraham Lincoln.
Yes, that's a good point.
I was thinking about it. I'm like going through some ideas on quotes, and I'm like, you're not going to find quotes that, talk about levels and the importance of levels. I could, but then I saw this. I laughed. I thought it was funny.
No, I do. And I was waiting for it because I was like, that Abraham Lincoln really known for his cut ups. That guy is a real crack up. Well, thanks everyone for stopping by today. Hope you do in the future. And hopefully we can help you out with some strategies, look at the charts occasionally, and give other tidbits of wisdom. In the meantime, Hogue, send us away.
Right. Levels are good. They offer the opportunity to execute and to limit risk. Important safety tip, though, they are zones. There's nothing finite in futures trading. Every level, there's a little bit of give and take. So just keep that in mind and try and get your best trade location according to those levels. Trade well, everyone.